Is up, everybody? How we doing? Welcome to Benzinga Live. I'm running solo today. That's the situation. Aaron Bree is coming at us. Where is he? He's in New Orleans. Where is Aaron? He's somewhere. He's not here though. Is the bottom line. So I am doing today's show solo. That's okay. I've got plenty of people to keep me company. First, I've got you all in the chat to keep me company. I appreciate all that, all the questions, all the engagement. I've got a number of guests lined up as well. It is a Monday, so we'll talk to Matt Hammond. We'll talk IPOs for the week, if there even are any. I'm not sure if there are. Frankly, a lot of companies pulling their IPOs right now. It's not a great time to be IPOing right now. So I'll have Matt Hammond join me at 12:15, give or take. My big interview of the day will be at 12:45 when I talk to Peter Wall, the CEO of Argo Blockchain. They had some news the other week where they announced they were diversifying away from just crypto miners or mining into other blockchain-related ventures. We'll talk about that at 12:45. I'll have Jake Wujastyk and his beautiful TrendSpider charts at 1 o'clock, and then Chris Capre from the Benzinga Options Trading School will round us, take us home at 1:30 p.m. Eastern Time. What's up, Easy Mike? We can talk about ARKK. I got a lot on my mind here, so let's go ahead and start this show. Where's my intro? There it is. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujastyk from TrendSpider. We have a
breaking news.
How's everyone's day going so far? Here is a look at the overall market in my Benzinga Pro watch list. You can see way more green than red on the screen. You've got the defensive trade trading down today, right? You got staples in the red, you got energy in the red, industrials in the red, banks flat basically, but everything else more or less in the green, driven by communication services, which is basically just Amazon, and tech. I mean, look at the Qs. Qs up 2% today. XLK, which is more or less the same thing, up 1.3% today. Apple's up. The Russell's up. All right, we have ourselves a green day. That's going to be a nice way to end the month. Let's bring up some charts here. Let's not bring that chart up. Let's bring up a chart of the SPY. And let's just go, maybe just zoom in. Let's just zoom way in on the SPY. And we're just going to go and look at the SPY versus the Qs versus the IWM. And you can see it has been a pretty rough couple of months. Now, last day of the month, a lot will be written about that. This is the worst month for the S&P since March 2020. Worst month for the NASDAQ in what, like 3 years? 4 years? Something like that. So at the moment, we do stand poised to close the month on a high note, but everyone sees red for this month. Now, the question is, what does that mean going forward? I think, frankly, we still need to sell rips and buy dips. Okay, so you're seeing tech up today, right? Like you can look at ARKK, which is having a pretty good. ARKK is getting inflows. People are still putting money into like net inflows. People are still trying to buy the dip in ARKK. Let's go to an intraday chart on that. Come on, there we go. I mean, it's having a really good day. I just like don't think you can chase anything on the upside or downside. I would much rather just like sell into any of these green candles and buy a red candle, as hard as that is. But that's sort of just where my head is at right now. And that goes for anything across the board, right? Patrick Starr says, are we really up? Yeah, we are really up. I mean, let's just go back to that SPY chart. We are really up. Of course, let's just refrain from judging anything until the last half hour of the day, because or even the last hour, because that has proven to be extremely volatile. So Can we actually hold these gains is a whole other question. But for the moment, we're green, which I guess is something. Look, I mean, we've just been range bound, choppiness for the last, I mean, really the last couple months, but in the last week in particular, it's just been choppy, right? And that's kind of what I'm just expecting here going forward, at least through the March Fed meeting, at least. I just can't see us like ripping higher. I don't think like the end of the world is near. Okay. People that are calling for like a massive correction, I don't see it. Sure, it could definitely happen. But corrections like this, that like what we've had, are normal. Let's sit on that for a second. These corrections are normal. I saw a really good chart earlier this morning, and I want to let me see if I can bring it up right now. It's from Wedbush, I think. It's from Wedbush, and he looked at. Hold on. Let me see if I can find it for you real fast and bring it up on the screen. It was a chart that showed the number. Yeah, here it is. I'm going to share my screen real fast so y'all can see. It looked at the number of corrections per year, or the number of here. I'm not going to do a good job of explaining it, so I'm just going to show it on the screen right now. Here we go. It's about a chart about drawdowns. All right, this chart shows the number of drawdowns in the S&P 500 per year, like a 1%er, a 5%er, a 10%er, and how often these occur on average. So looking at the top row, we get a 1% decline in the S&P every single year since the start of the Great Depression. Every single year. It happens all the time. We get a 5% decline in the S&P a little over every year, about every 1.1 years. 10%, about every year and a half, give or take. 15%, now we're talking every 2.5 years, so it's not super common, but again, it does happen. 20%, which is an actual bear market, occurs on average every 4 years. We just had that 2 years ago. And then you just go beyond that, and you can just see, I mean, we get a 50% correction every 47 years, so that almost never happens, but it does happen, right? And the reason I like this chart is because, and the source is from, is that Charlie Blair? He's a great follow on Twitter. Drawdowns happen, right? These things happen. I saw a note from Raymond James this morning that was basically saying that right now, today's market looks very similar to January 2016, right? Let's go to January 2016 on my SPY chart, and I can just show you what happened then. I remember I was working at Benzinga then. I remember it. We basically went down to start the year because the Fed was raising rates. This is a weekly. Let's just zoom way out of here. Oh my gosh. Look, there we go. January 2016. So we ended the year in the SPY. We ended the year at what is that? At 203, and we got down to 181 in the first half of January, from 203 to 181. Okay, and recall what happened the prior fall. The Fed started raising rates again, right, for the first time since the Great Recession. So they were drawing parallels to this. The market that we're in right now, it doesn't feel, and I know like trusting your feelings is silly, but it doesn't like feel, to me at least, like the sky is falling. I don't know. Like, I'd be curious what you all think in the chat. Do you feel like the sky is falling? Doesn't feel like the sky is falling. It feels kind of normal to me. No. Okay, here. So sorry. I have to catch up on the chat. Thank you, Jadid. I appreciate that. Does this chart show how much money was in the system at the time of each of these downfalls? No. Are you referring to like the M1 money supply? Which I don't have a great understanding of that number. I mean, I know there's more money in the system now than there ever has been, but I think relying on one number like that, any one number is, I think, recipe for being misled because there are thousands of indicators that affect markets. So anyway, my point was these things happen. Let's not freak out. Even if I end up being right and we just get chop for the rest of the year, like that's okay too, right? We don't look at the year we just had. Look at last year. We had what, one down month last year? How many down months did we have last year? And this is in the S&P. We had, okay, so January of 2021 was a down month. January, September, and November. We had 3 down months all year. So basically we went, and those down months were, I mean, they were small. I guess with the exception of September. Sorry, it's been a minute since we had a month that was this far down, but still, we basically went straight up last year. It's okay. We're allowed to have down months. I'm not freaking out. And frankly, like a lot of the stocks that have been punished for the last year, like a lot of the growth tech, I mean, I guess they're bound to stop going down eventually. Here's a monthly on ARKK, right? These stocks have been ahead of the overall market in terms of the direction, right? Because we've talked about this ad nauseum. They've been falling for a year, as opposed to the overall market, which has been falling for like a month and a half at this point, right? So does that mean that these are going to bottom first and turn around? I mean, it could. I to be honest, I have flirted with the idea. I know I said I wouldn't buy anything. I have not bought anything for a while. Truthfully, I haven't bought. I don't even know the last thing I bought was. I think it was like in August. But you know, the more we fall, yeah, it makes things interesting to me. I'm not gonna lie to you guys. Whether it's ARK here, well, for me it's the ARKW because that's what I've got. Or some people keep mentioning SoFi. Like, how low is SoFi right now? So it's at $12. All right, so I'm getting like solidly punch in the mouth here. I'm not going to buy more SoFi, just to be clear about that. I have my position. I'm comfortable with it. The reason I'm comfortable with it is because it's not very large. Adding more would just be making it larger. It would just make me sweat more. So I'm not adding to SoFi. But I'm not underwater in like ARKW. I think I'm almost back to my break even at this point. I could potentially get talked to adding more into like an ETF like this, provided, and this is the caveat, provided we go sideways for a little while, right? A couple weeks of sideways action. Up, down, up, down, up, down. Like if ARKW falls to, 80, I'm not trying to catch that knife, right? But we get some sideways action. I could get talking to. I can get talking to it. I really could. Sorry, I'm looking at like 4 things at once, so I'm trying to watch the chat and talk at the same time. Now, all this being said, that's in my own portfolio. I want to throw in a question out to you all. All right. Over the weekend, it came to my attention that a relative of mine, my aunt, she called me up. She said, Spencer, I've got $20,000 that just moved into a Fidelity account. And she said, what should I do with it? So I'm going to relay the question to you. A middle-aged woman who is not going to need this money for a while, right? This is theoretically money that she's not going to use until she retires. 20 grand. How would you approach that? Easy Mike, you're going with a safe answer, okay? So this is what I wrote. I wrote down a list. I gave her a list of things that I would buy. It was VU, it was EFA, and then I threw a little Bitcoin on there. That was my list. But I am open to riskier. I'm not trying to gamble with this money, okay? But I am open to other ideas, Yeah, Patrick, AB is an ape, unfortunately. That's what we've come to at this point. Jay Rice says Tesla calls. All right, I mean, see that I know he's not serious, but those are the kind of ideas that I'm not writing anything off. Okay, YOLO into that GME. There are better ideas than that. Sorry. Brian Blockchain, can you drop me a ticker? Brian Blockchain says he would do an O shares ETF. Can you be more specific, please? As far as what O shares ETF you would buy. I am thinking some dividends. I'm thinking some sort of dividend thing. Someone suggested the NASDAQ covered call ETF for income. Okay. Not a terrible idea. OUSA, get those fat dividends. Okay. I'm going to add OUSA and QLYD to my, let me write them down right now. OUSA, QLYD, YLD. All right. I'm not buying AT&T for the dividend. Sorry. No, I'm not doing that. Sadat, what do you want, man? What's going on with what? I mean, we're trading higher. That's what's going on. Easy Mike says half VU, half Bitcoin, wow. All right. That might be, I don't know how I feel about that, actually. It's definitely aggressive. I don't hate it. I don't know if I think I'd rather do one or the other, either ARK or Bitcoin, preferably not both. Okay, Star Smoke. This is sort of related to my question, but a little bit different. I'm a student with 10K in savings. I don't want to let it sit in a bank account. All right. Well, you're a student, which means you're young, presumably. Maybe not, but I'm assuming you're young. I guess the question is, Star Smoke, and this is the advisor question, but like, what do you want to do with the money? Do you want to just like let it sit there and grow? Do you want to like actively trade it? Do you care about actively? Some people, frankly, just want to set it and forget it. Like, what's that? That infomercial, right, for the chicken rotisserie thing, right? You set it and forget it. Some people want to do that. Some people want to set and forget like part of it, and then have some fun with like the other part. You can do that too. So that's the first thing I would say is, what do you want to do with the money? If the answer is you want to set it and forget it, then I would just buy like the VOO or the SPY, and I would just call it a day, right? Boring, simple, pretty conservative, and then you're done. In fact, that's what I would probably do for even if you wanted to like play with it a little bit. I would take maybe like a big chunk, if it were me, like half, throw it in like VOO, and then play with the other half, right? Maybe you win, maybe you lose. That's what I would do. All in on ARK. ARKG. Have you guys seen ARKG? Poor biotech. ARKG is just getting, I mean, the whole biotech trade. I guess ARKG is really not that dissimilar to the rest of the ARK funds. But the whole biotech trade has been so. Let's look at ARKG compared to XBI and IBB. Oh, hey. Go ARK. ARKG is actually demolishing those other ones. See, this is interesting. Okay, so I didn't realize this until just now. I just arbitrarily went back to May of 2020. You can play with the time frame and get different data. But these are 3 biotech growth ETFs: ARKG, IBB, XBI. ARKG is crushing them. And what does ARKG do that the others two don't? It's actively managed, right? They're constantly buying and selling biotech stocks. And she's outperforming. And so this is a better comparison. Rather than compare like ARKG to like ARKW or ARKK, compare it to the other biotech ETFs, because it's the same industry, same sector. She's No, I haven't seen anything written about that, but they're crushing it. They are. I mean, they're getting. They are getting crushed compared to the overall market. But if you compare them to just their peers, and again, if you play with the time frame, you get different results. That's kind of the point. But if you go short term, go back a year, they're getting crushed, right? But go back 2 years, they're still crushing it. So you get different numbers with different time frames. That's kind of the point. Time horizons are arbitrary, but interesting. Hadn't seen that before. Okay, so what else did I want to do? I wanted to look at just the top gainers and losers of the day. I have on a different screen here. Some of these stocks that are up today are just, I mean, no offense if you're in these like for longer term things, but like Arrival, right? Like ARVL. I feel like every other day this stock is like leading my up filter or my down filters. Every other day. ARVL. Come on. We talk about like selling rips. There's a rip to sell. Look at the trend here. I mean, again, I don't know what to say about it. It's your number one gainer today. It's like the top gainer on my screen, but it's a trash stock. It may not be a trash company. For all I know, this could end up being one of the ones that make it. But it's a trash stock, frankly, right now. So, please be cautious chasing anything like that. What else is trading up today? Like Fiverr, FVRR. Up 16%. Here, you know what? Does Fiverr actually have revenue? Yeah, they do. What do they have earnings though? They don't. No earnings. Great. All right. Growth stock up 16%. I mean, they're buying growth today. That's just the way it is. They're buying growth. They're buying ARK. They're buying stocks like Fiverr. Like, how is Zoom doing today? Yep. Zoom's having a good day. How's Peloton doing? They're just buying growth. There's nothing specific. There's no real reason. There's nothing behind it. It's just a growth day. That's what it is. Robinhood. I bet you Hood's up without even looking. I bet you it's up 6%. Oh, I stand corrected. 13%. Excuse me. $14, $14.50 now on Robinhood. There is a part of me that wants to see this go lower so that I can buy it, right? I am in the camp that Robinhood will get acquired eventually. My personal theory, which is based on absolutely nothing, is that Fidelity will buy them. Not at $14 a share though. Like if Robinhood got to like $7 or $6, I would probably buy it on speculation that they get taken out at like 9 or 10, right? I would for sure do that. That's not a good strategy, but again, it would be sort of like a small YOLO trade for me. Anyway, Robinhood, since that earnings report, which again was not great, to be generous, it was not great. We're now up almost 50% in the 2 days since that earnings report. Can't argue with that. SoFi doesn't have the capital. There's no. What is SoFi worth? I don't even know. SoFi, no. SoFi has a market cap of $9 billion. That's less than Robinhood. They wouldn't. No. That doesn't work. I think Fidelity could buy them because the bottom line is, Robinhood has what? $100 billion in assets and 22 million accounts. That's worth something, right? So I think someone's buying Hood, but they're not buying it at 14. I hope you see it go down so I could buy it. That's where I'm at. Twilio. Someone saying buy Sava. Twilio is on my like watch list. I'm not doing anything with it, but it is on my like keep an eye on this stock list. Mostly because this it is a good company. I just started listening to a podcast about Twilio. By the way, if you guys ever need podcast recs, I listen to a lot of podcasts, but the podcast from it's called Business Breakdowns. Is the name of the podcast, and they did an episode on Twilio a few months ago, and actually it was almost a year ago now, and I just started listening to that. But I think Twilio. I mean, we use Twilio at Benzinga. I think they're a great company. Obviously, the stock speaks for itself. The chart speaks for itself. But this is one that I would like consider buying at some point. I don't know when though. I can't do Sava. Sorry. This is a stock that you have to understand what is happening with their drug, and I haven't bothered to learn, and I'm not going to. So, sorry, I'm not buying Sava. Anyway, catching up here. Let's go over to crypto land, and again, we'll have Matt Hammond on in a couple minutes to talk IPOs, but let's just take a quick heat check on crypto and see what's up and what's down today. Does that sound good? Let's do that. All right. Here's the heat map. If you're on benzinga.com/markets/cryptocurrency, the heat map is there. They just moved it down, further down on the page, but there it is. So, hey, it's a growth day, which means crypto should be higher, and it is, right? Bitcoin 38,800, ETH 2,600, Binance Coin 385, Cardano. Oh my gosh, look at Solana, below 100. I did buy some Ethereum and some Bitcoin. I've been doing. I have a recurring monthly purchase, so just adding a little bit more. But I kind of think that's the only way to do this, is to just do a recurring thing. If you've got a small position like I do, if you own like a lot of Bitcoin or crypto, then kudos to you. You have to have a high risk tolerance. I don't have that kind of risk tolerance, so I'm just buying a little more every single month. And that's how I'm going to survive the crypto winter, I think. Sorry, I'm just reading the chat. I don't even know what you guys are talking about right now. Anyway, this is the heat map. You can find this on benzinga.com/market/cryptocurrency. If you want free Bitcoin, all you have to do is download the Voyager app. The Voyager app, you use the offer code ZING, Z-I-N-G. You open your account, you fund it with $100, you make a trade. Any trade will do. And Voyager will send you $50 in Bitcoin just for opening an account. Check it out. Voyager.com, ZING is your offer code. By the way, how many on likes? Oh no, likes are not working for me. 39 likes. Come on, I got some beautiful Bored Apes behind me. Can I get like a little bit more love than that? 50 maybe? 49 even? I think we can do it. Anyway, something else I wanted to do that we don't do enough of on this show, frankly, is we don't go to benzinga.com. So let's go to benzinga.com and look at the top stories on our homepage right now, because, again, we publish, I don't even know, like hundreds of stories a day. Not even kidding. Hundreds of stories a day. See, I made this note this morning as well. Our top stories and analyst. We have two top stories on. Well, no, this is an analyst, and this is Vinco Ventures, and this is Joe Rogan. So, all right, let's talk about all these things right now. The analysts on weeks when or days when there's not a lot going on, The analysts can and will move stocks. They moved it this morning. Let me show you what I mean in Benzinga Pro. Analysts were moving stocks this morning. They're moving Spotify. They're moving Beyond Meat. They're moving Netflix. Where's my Pro? Come on, Pro. Where'd you go? There it is. So let's go to a calendar in Pro. I'm going to show you. This is Benzinga Pro, our real-time news and research platform. Let's go to a ratings calendar, and you can see look at all these ratings today. The analysts are playing catch up from all the earnings from last week, but because there's not a lot, like there's no like macro driver of the day, they can move stocks. So like let's go to Spotify for example, right? There's that whole Joe Rogan thing going on, which I don't know. Did you guys see the video he posted on Instagram? I'm not a big Joe Rogan fan, but I thought that was a really, really good video. If you don't know what I'm talking about, Joe Rogan obviously in the news a lot because Neil Young and who's the other
I forgot the name too.
Not Joan
When I saw
Baez.
that video. It was
Who's the other woman that's taking her music off the platform? Anyway, whatever, it doesn't matter.
Yeah.
They're taking their music off Spotify because Joe Rogan and the guest he has on the show, he posted a really good video on Instagram where he basically was like, yeah, I could do a better job of getting both sides. And Joni Mitchell, thank you. And he seems to take the fact that he has a huge audience very seriously, which as someone who has a tiny audience of 200 people watching, I can appreciate. So he seemed to be very genuine. Now, this kind of a thing, like this whole Joe Rogan saga, this kind of a headline is not the kind of headline that Wall Street really cares about. Like, it's news, but there's a difference between like news and news that the market cares about. The market does not care about this Neil Young, Joe Rogan thing. It straight up doesn't. All right. If there are any like impacts in terms of like Joe Rogan like leaving the platform, then yeah, that's worth something, right? But an artist or two or four leaving Spotify does nothing to Spotify's bottom line. Therefore, the market does not care. So I would say whenever you're looking at news and you see news out there like in the world as it pertains to a stock, think about, does this headline affect the bottom line or future earnings? If it doesn't, then just know that the market will not care. That's the truth. This is not a headline that the market cares about. It will trade independently. Even if this, like, let's just say, like the Joe Rogan thing, let's just say it picks up steam. Let's just pretend that whatever like the story is now, it keeps gaining momentum for weeks, like into next week. Unless Joe Rogan like leaves Spotify, the street will not care. The stock will do what it's going to trade, frankly, with the market. I don't even know if the market cares about earnings right now. Or Spotify earnings, I think, are Wednesday. All right, earnings, I think, are kind of irrelevant in the short term. Actually, I know they're irrelevant in the short term, right? Let's just look at like Apple last week. Great quarter. Where's that chart? Great quarter. Gave back all its earnings gains overnight. Short-term earnings don't matter. Long-term, they do. So anyway, Spotify's earnings on I think it's is it Wednesday? It's Wednesday or Thursday. I don't remember when. It's Wednesday. Spotify reports on Wednesday. They're probably going to report, slow growth because every subscription service has said that, and that's what Spotify is at the end of the day. But it's going to trade with the market. If the market goes higher, Spotify will go higher. If it goes lower, Spotify will go lower. It's that simple. Today it's higher. It's up 12%. Market's up. I think really keeping it simple like that is kind of the way to go. And also, I would love some opinions from the chat as far as which earnings calls you would like Benzinga to stream this week. Last week we streamed Tesla. We did Apple. We did Robinhood. We did Netflix the week before that. Here's the calendar for the week. Drop the tickers in the chat that you want to see us stream earnings calls for. And I'm referring to the after hours session. We're not going to stream calls in the morning, but for the after hours session, like for tomorrow, for example, would you want to see like Alphabet and GM? I'm thinking we probably wouldn't do more than 2. Or AMD or PayPal. By the way, you can watch all these calls at your leisure. I mean, they're available on the Investor Relations website. The links are in Benzinga Pro, but go to the IR page on any of these sites, and you can watch them yourself. I'm just asking, which calls do you want to see us stream, and you can come hang out with us. So we're obviously going to do Facebook or Meta. Sorry, we're obviously going to do Meta on Wednesday, and Amazon on Thursday. But Daniel wants to see Ford. Yeah, I think we'll probably do Ford too. Daniel. Intel, shoot. Wait, is Intel even on here? That might be an error. If it is, I'm reading over it. I don't even know where it is. Let's see, PayPal. Okay, if you see some more PayPals. Aurora Cannabis, we're not going to stream that one. Sorry. Intel was not. Thank you. I was like, I don't see that on here. Okay, so we're probably going to do Google/Alphabet tomorrow. We'll do Facebook/Meta on Wednesday. Maybe Spotify. You guys want us? You want us to stream Spotify? Do you care about that? Thursday we'll do Amazon and Ford. Shoot, is Coinbase is not this week? I don't think so. That's a question for next week. But let us know who you want to see us stream. Tweet at us, right? Okay, let's do this. It is 12:08, and I've been running solo here for a hot minute, and it's been fun. But let's bring on our first guest of the day, Matt Hammond. He runs IPOwarriors.com, and he always has good thoughts on both what happened last week in IPO land, how he traded it, and what is happening this week. And the reason I like Matt's take is because I naturally have a longer term point of view on things. I can't really help it. Matt's got a super short-term view on things. Matt is trying to like day trade these IPOs, and that the way to do that, the mindset to have is so very different than the mindset to have when you're like talking about like a longer-term investment, right? And so it's a whole different side of your brain, and I like hearing what he has to say, because like what I might assume is a good IPO to him is like an amazing trading opportunity, and vice versa, right? An IPO that he wouldn't touch for a trade, is one that I might look at for a long-term thing, but it's very different things. Yes, and Cal, don't worry, that'll be my first question. So without further ado, let's bring on Matt Hammond from IPO Warriors. Matt, good morning. Well, good afternoon for you. Good evening for you.
Good evening.
How are things over there?
I mean, same as they were last week and the week before that. I'm in Ukraine, so we are kind of making preparations for, possibly having to get out of here. We got the dogs chipped over the weekend. We have our kind of like, they did give emergency visas to my wife. So there's kind of like just being ready, but, they're not all that hysterical here. They're kind of like, we've been in war for, since 2014 with Russia. The U.S. is, I think, stoking a lot of panic in some ways, and certainly the media loves the story and just can't get enough of it. And I don't know if that's really a disservice or I don't know. I get 5 times a day from every member of my family and friends, which I appreciate, people checking in on me, but we're doing what we can to prepare, and likely will, if things get heated over the next week. I think we have about probably a week or two window before anything really kicks off, because they're not going to do, or the prevailing theory is nothing's going to really happen during the Olympics. China and Russia are pretty close, and I don't think China wants that kind of headline overshadowing its event. In 2014, they waited for their own Winter Olympics in Sochi to conclude before they annexed Crimea, and we're just putting ourselves in position to be ready to go.
So it sounds like things have not gotten worse, and maybe they won't get worse with the Olympics coming up for a minute.
It seems like we have a little bit of a respite here, and it does seem a little bit weird if you're going to invade, or attack somebody, to spend all this time sitting on the front door instead of just kind of using the element of surprise. So this feels like there's some other kind of provocation or agenda at play here, but I'm not really a politician. I'm trying to keep my family safe, and that's that's the number one.
That's obviously what we are rooting for here, is just everyone's safety. So it's good to hear that things haven't gotten worse. That's like the headline here, and that's good. And yeah, let's go to the market. I don't know how much you can focus on that right now, or how easy or difficult you're finding it, but I see.
In some ways, it's a welcome. Yeah, it's a welcome distraction. And on days like today, when I'm not dancing around margin calls and kind of got myself into a safer position there, it's more more enjoyable than the last probably 2 weeks have been. But when you're flipping IPOs, the bulk of my wins and really the kind of life-changing strategy that I used over the last year and a half has been to get in and out. Like you said, I'm getting into these pretty quickly. The move has changed a little bit. I've been talking about that in the newsletter, where it used to be really buy the IPO debut, like the opening trade off the when the IPO starts trading, and just ride the initial momentum. But that trade isn't really happening in a ice cold market where everybody's kind of running for shelter. But what has been working recently, and we mentioned this on the show last week, is buying kind of the dip off of the debut and trying to recognize the opportunities that come after a drop in the IPO debut. And we had a couple really good examples of this from last week that we can jump into. I've shared my screen here. You got that? All right, let's bring this on. So the reason I'm mentioning these plays, not as debut plays, but really as accumulations off the drop, is because they really worked well. And we have a couple others coming up. So we had there's kind of a lull in the IPO market for mainstream IPOs. We don't see major companies trying to go live right now. And there's two reasons. One is the market is really cold, and we saw TPG Group did all right, but not a lot of volatility one way or another off their debut. And then CRDO, they went live last week, which was kind of the first, I'd say, it was kind of the first IPO that a year ago might have been really hot. And this, last week just showed that, they priced at 10 to 12, and then they actually, priced the IPO, the range was 10 to 12, and then they priced the IPO at 10. Barely got any kind of debut premium. They tried testing 12.50, 13. It was just sell side imbalance the whole time. And Goldman Sachs has a history, or in my opinion, of trying to push the envelope of the debut trade as high up as they can. They really don't care about giving any space to retail traders to get a profit off of the debut. They're trying to feed those institutional buyers that bought the IPO, and they couldn't get 13. They couldn't get, they tried to push it up. But it just kept showing a sell side imbalance in the IPO crossing. And when we see that before the first trade goes live, you have to step away from it. You don't want to be, buying in when everybody's selling. And this is one of the few times in a market where you can really see that is on the IPO debut. And you can see this in the Webull app. I'm live streaming these now, if you follow the YouTube channel. And I'm showing you guys, like, hey, if this is sell side imbalance and they keep trying to incrementally push it up, don't buy in on this debut. You can wait till after the drop, and they debuted it at about 12.10. It dropped down to about 11. If you see that baseline at 11, and then you pick up some shares underneath that, you can try to get a reversal. It did go back up to about 12.50. That's not really a huge move, and just babysit that all day, but it is a 10% It gave you a 10% move if you sat there and played it. But there were some other ones that were a lot more interesting. And this is in kind of the low float boat. Low float IPOs, a lot of these just don't care about the market conditions all that much. They're going to go live with or without a strong market, because a lot of times there's something else behind the scenes. Some of these have been like stealth IPOs, which I believe are some kind of Chinese money laundering setup. Other ones just don't really mind that much. And where we used to get a lot of day traders just jumping in right on the debut, we are seeing people kind of pull off that a little bit. So the move for about the last month or two has been what looks like the IPO debuts and it drops. And then for maybe a day or two or even a week, these trading groups kind of accumulate the shares down at a baseline. And then one day, all of a sudden, it just pops. And we saw this with Vine. We saw this with a few others. And this week, we saw two of them. One of them is up 40% today after ripping. I mean, we'll look at this one now. So we had KSCP.
That's the one I'm waiting for.
So KSCP, this one was advertised all over CNBC.
Everywhere. And Benzinga, everywhere.
Yeah, so they really got a lot of retail buyers to get in. They didn't go after institutional traders, and they therefore had no real reason to wait for the market to get better to take this live. It was a little bit of a surprise because they didn't really even put it on the calendars. It was just sort of during the day, came to my attention, hey, this is IPOing today. And I was like, wow, I heard of this. I, got offers to buy into it. I wasn't too interested because we haven't seen a lot of, there have been a handful of IPOs that have been really pushed on, onto retail traders pre-IPO, through these channels that we've seen. And Nightscope wasn't even showing up on TD Ameritrade as, being able to place pre-debut orders, on the day of the IPO. And it wasn't available on Webull. So whenever I see, I learned my lesson with CDU, if we don't see a ticker kind of showing up on trading desks the day of the IPO, I'm not going to trade it because that just kind of kills demand. And with Nightscope, maybe we would have seen a day one run, but it really just fell off of the open. For an IPO that was priced at 10, it debuted with a lot of strength. It debuted up at 1444. It made an instantaneous, too fast to do anything with it, popped up to like 15 something, but then halted down through 3 halts. And I take that to be, IPO flippers just saying, I'm going to take my money right now while I'm, in the profit. If you sold out on the debut, you got a 44% win right there. The rest probably started just panic selling. And once it hit kind of this bottom around 7 or 8, you just got to take your hands off and go, okay, wait a minute. But when we were live trading this, I saw 2 levels of buy walls below the IPO or below the the last trade price, and they just kept kind of accumulating. And when you see that accumulation, I've seen that on a couple low float IPOs where the next day or a few days later it really popped. So I didn't play this myself. I was, like I said, dancing around margin calls and loading up on a ticker that I've called out a few times, IINN, which is up 32% today. I was loading up on that down at about $2.20. Now it's over $3. But I didn't play this out. I can't take any credit, in my opinion, when I don't play it. But I did say this to other people, look, this looks like, if you want to accumulate down here at 6 or 7 and hold on to it for a little while, I'm sure you get a run at some point. I don't know when that run will come. Well, it came first the next morning.
It came like the very next day.
Yeah, and we have seen that. I did not, obviously, if I expected this, I would have done something more with it. But I thought it would have taken, and we'll see in the next example, one that took a little bit longer. But yeah, the next day, it very briefly, this was over about 5 minutes, just ran up to just under 12 and then fell out. And looking back, that wasn't a lot of volume, actually. So I believe that someone just basically cleaned out the ceiling. Basically, whoever had accumulated a big position here was like, all right, well, I'm going to clear everybody out here. And then it baselined and just took off. And, I started thinking, oh, well, if I had bought in there at 10, I'd probably be selling. That's the IPO price. It busted through that, came back down to 10. And then just, this is unforeseen. I don't understand. I mean, I looked at this company, I researched it. It's not all that interesting to me. Maybe, it's basically like, to me, it's Roombas with security cameras on them for parking lots, shopping malls, hospitals. Maybe that's a good business. They just haven't done a whole lot in terms of, they don't have a ton of customers. It's not super sexy to me, but maybe it's going somewhere, and apparently people,
I mean, it's
it.
a growth name. It's a growth company. It's in a time where it's not a great environment for growth names, but it is theoretically a growth business.
Yeah.
But
so the key here was that there was clearly excitement and demand on the debut. The people that were interested in it were willing to pay a premium to get, who didn't get IPO shares were willing to get in. I think there just wasn't demand because it hadn't been registered with all the trading desks. And then once it was, once it was in a dumpster, nobody wanted to jump it right away. But the opportunity was clearly there for someone to, accumulate a big position. It's 4 million share float. So, talking about a very low float to control. And if you had accumulated that and you start, running it, or people started getting interested in it, this one, I don't know if options will ever become available. Generally, when we have such a low float, we don't get options. But if this becomes shortable, you definitely have to watch out, because if everyone who's already bought it has bought in, and there's a lot of excitement for new buyers to come in, we've seen these low float IPOs get kind of viciously reversed once shorts find shares to dump. So definitely wouldn't chase it up here. But if you caught it, I think I wouldn't even wanted to chase it once it hit 10. But if the play that I called out, and the play that would have been maybe interesting to me if I had a lot more free capital to play, would have been, okay, you can start a position on the end of day bottom here. If you get another drop off, we'll see a lot of times on day 2, people are like, screw this, I'm over this. You buy that and you sit and wait on it. Maybe you get something, go on. And here's another example. And this is, I called this out yesterday. I said, after TKLF, I said, watch for FGI tomorrow. I had a little allocation from the IPO just from testing, put in $100 to see what kind of allocations people get, and said the same thing. If you want to play these low float IPOs, watch for this dip. If you want to accumulate a little bit down here, a little bit more down here, the number I kind of start finding the $5 to $6 IPO attractive is under $3.
Why is that?
Just from having watched enough of them, if you start at $3, you'll get kind of, and just scale in. I call it the dental zone. It's a dad joke, so sorry, but 230.
230, got it.
Yep, that's kind of the one where I start to say, okay, well, from here, up is much more likely than down, and all they have to do is drop any kind of little headline and it'll run. This one got nothing. This was no headline or anything. This was just kind of bottomed out right here, and I think people saw TKLF run and started looking back on the low float IPOs, the recent low float IPOs. TKLF also ran. When people saw KSCP run, they started looking for the last couple low float IPOs and pumped them. And this one followed suit. So if we look at TKLF,
even though it was a totally different company and a different IPO process, because KSCP did a Reg A offering into their IPO, but wow, so they actually popped the other low float recent IPOs on this. I didn't even see that.
Yeah, so I'll bring up, sorry, my screen's going a little. So this one, I had called this out as a stealth IPO. It debuted at like 43 and dropped like a rock. But this one, again, it's just a low float IPO. People started, I think at around here, people said, okay, well, we're the low float IPO. Okay, these other ones are running. Why not this one? So, if you got in at 3, you wrote it up to 450. So right now, we've seen low float IPOs go through this kind of cycle where, because they are such low number of shares, it's really easy for them to get overinflated. And when these became hot, I'd say in the middle of last year, we started seeing the debut premiums get kind of jacked up to the point where in November, December, I burned myself pretty hard playing one that was way too hot, and it came down and hasn't recovered. But then people cool off and they step off of them, and now we start seeing a bunch of them just kind of plummet. But there's still the same dynamics where there's not a lot of shares traded. You can't short them because they're brand new. There's no shares available to short. There's no synthetic effects on these because there's no options on them. So they can be pretty purely, traded in a way that people accumulate the shares, they pump them, they dump them, and that's the play. But if you get in at these bottoms, there's a couple setups that we've been looking at. One of them is the lockup expiration. One of them, getting out before that. Another one is the quiet period expiration, which is 40 days after the IPO. So I've watched a few of these. The biggest one, again, was IINN for me. I just watched it drop and drop and drop, kept adding and adding and adding. And then when they came out with their first big headline, it ran from like $2.25 to over $9 in one day. So that's kind of the longer play of accumulating. Now we're seeing in a cold market these IPOs drop hard, but then people are kind of I have a watch list of all the recent low float IPOs, and when they hit their kind of this bottom territory, this one came down to 238, so pretty close to that dental zone. Others that once they reach that, especially if they get towards the quiet period expiration, there's not a lot of the downside is already bottomed out, and all they need is one headline, and everybody kind of jumps into them, and then they run. So it's an interesting setup when there's nothing else kind of in the mainstream IPO market to play. These low float IPOs, they attract the day traders. The day traders like them because other people aren't. It doesn't have like a lot of history. There's no bag holders outside of people who bought the IPO. There's no kind of residual history of these, and it's just a pure like buy them up, buy up a bunch of the float, pump it a little bit, get other people excited. If you can get the traction, run it up and sell it. So we do have some more low floats like this. I think that's all we're going to see going forward until the market really stabilizes and investment bankers and the institutional money is ready to commit to the more mainstream plays. We're going to see low float. We're going to see regular biotech, which is just a different, I just don't play them. There's one example of that today or this week. And then we're going to see credit banks. They'll go live in this market. But we're not going to see mainstream IPOs, my guess, until probably March. Another point that I read from the guy who runs the Renaissance IPO fund is he was pointing out that major companies are doing all their end of year accounting right now, so they're not ready to launch an IPO process. But low float, this is where the game is, and these are the ones you want to be watching out for. This one is tomorrow. This is Maris Tech, MTECH. I kind of like this one. It is still available on Webull, Click IPO. They do electronic components for video surveillance and analysis. So, video is big. There's supply chain issues across the board. As far as I understand, a lot of chip makers their products are in high demand if they can manufacture them. And these guys have pretty good numbers. Revenue up 151% for the 6 months ending June 30th, 2021. Gross profit up 178% for 6 months ending June 30th, 2021. Their negative baseline for financials are offset by the fact that they're all moving towards positive. The underwriter is at GS Capital. They did AERC. They've done a couple others that have done pretty well. So I believe they did that. I have to actually go back and check which ones. But they're not usually operating in the realm of stealth garbage from China. They have put together some legitimate companies. So I'm going to watch the debut price. If it's at a premium, and I did put an allocation request into Webull just to see what kind of fill I get. If the fill comes in small, that's a sign that, like, if you request, I'm putting in like $100 or $200 just to see if I get 25 shares at $4, or if I get, 2 shares. If I get 2 shares, that tells me that there's a lot of people interested in this. I don't think that's going to be the case because it's, I think, still available on Webull. And if I can, I get some kind of indication as to if I get a full allocation, I'm sort of like, all right, well, everybody got a full allocation. If there's any kind of debut premium, people are just going to dump and lock in their win. That's what we saw with FGI. So if that happens, then okay, great. I wait, for the dump, accumulate at the baseline. Don't go all in on the first baseline, and really I kind of wait till the end of day one. Try to buy that dip right before, that extra kind of capitulation right before the market closes. But if you buy that, I really feel that given what the other low float IPOs have done recently, people are going to start keying in on this trade, and the run will be less extreme, but the opportunities will still be there, at least for, I think, the first one out of the gate, which is this one. By the end of the week, maybe the trade is played out, and people don't let it dip enough to make the comeback run worth it. But this one is tomorrow. I will be pretty busy tomorrow, so I don't know if I can live stream it. But watch this one and just be ready.
This is a great example of one that I wouldn't touch, but Matt is throwing out a strategy for how to play it. So.
Well, yeah, I mean, I'm not long-term bullish on KSCP, but I do wish I had implemented the strategy that I kind of called out to other people. FGI, I didn't sell my I got 25 shares or something. I didn't sell for a loss because I said, all right, well, this is going to go at some point, and I picked it, got out of it at 6 today, and get to keep the warrants for free. Who knows? Don't really care. Not a big position. Here's another one that's on the calendar this week. It was sort of on the calendar last week, but we didn't cover it. Direct Digital, DRCT. They haven't pinned a date on it, so I'm not sure it'll go live. This company does programmatic ad buying and selling. I looked at all their websites. They own about 4 brands that kind of come across as a really well-organized digital marketing company. The revenue growth numbers are, look really good on paper, up 330%, 9 months ending September 30th. Gross profit up 693%. They have positive operating net income and cash flow, which is pretty interesting. And their underwriter is the Benchmark company. They just did FGI, which is one of the ones we just looked at.
Right.
The float is really low, 4 million shares. So again, maybe I'm not trying to play the debut trade on these, but if they do dip down, if they price it at, price it conservatively and it drops, this is the kind of play, again, we've said it 10 times on the show probably, look to accumulate and wait for the pumpers to come in and run it. It's just an idea, but it's worked out pretty well recently. So keep an eye on this one. This one is just a biotech, Arcelix, blah, 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 something, cell therapies, cancer and other diseases. Just don't play these. You will be so much better off just ignoring these as IPO trades. Samsara Vision, we covered this one. They've rescheduled it at least 2 times, maybe 3 times. I don't think it's a super sexy play. Implantable telescopes, it's not as bad as a pure biotech. This one would have to, again, reach that dental level down at 230. Maybe in quiet period expiration, they give you some kind of headline that that pumps it. But I'm not particularly excited about this one. I generally like the low float IPOs that are not biotech, although some of them have worked out if they're kind of device related. MYNZ, IINN, all of those did pretty well if you held on long enough and accumulated after the dip. So no reason to buy this on the debut. If you do want to keep an eye on it, throw it on your watch list, wait for some volume to come in and try to play it, or build a position down at kind of absurdly low levels. We have seen people or groups just target these, and any headline will send these low floaters on 20, 30, 40, 120% runs. So those are the plays I'm looking for. Hope you guys enjoyed the show. Sign up for the newsletter, IPOwarriors.com. I called last week's setup on FGI pretty well, and gave out the Nightscope play on the live stream. So follow me, join me. Thanks for your time, Spencer.
Matt, stay safe, man. We'll talk to you again next week.
Sounds good. Take care.
All right. Hey, it's 12:35. We're going to have the CEO of Argo blockchain on the show in about 10 minutes or so. So Peter Wall is the CEO of Argo. He'll be on our show at 12:45 p.m. Eastern Time. If you want to hang out till then, cool. If not, it's all good. It's a free country. Do whatever you want. What's up, Shelly? Shelly's awake. Let's do this. You know what we haven't done for a while on stream? And I know it's a Monday, so it's like not the kind of day where we, kill time. But, I am running solo today. AB is out of town. So let's just, you guys want to do some Wordle? Let's do a Wordle. We haven't done Wordle on this show in like a weeks. So here we go. If you don't know the rules of the game, you get 6 guesses to guess the word of the day. Let's start with audio. Oh, not good. Okay, let's try. That's a word, right? All right, no. I guessed audio because it's got 4 different vowels. I guess star because R, S, T, L, N, E are the most common letters in the alphabet. And now I've guessed every single vowel except for Y. So we have a T and an I, but in the wrong location. Okay. I'm going to guess that the I is in the second. Let's go with like picky. Let's go with picky. Oh, I forgot I had a T in there. Whoops. Okay, so still no help. So second letter is an I. Let's go T-I. Let's go with T-I. There's no D. Let's go with T-I. G. No. There's no Y. That's not a great guess, but let's just see if that's right. All right, there is an L. L-I-T, we'll guess that. L-I-T, L-I-G-H-T. That's what we'll guess. Yeah, look at that. 5th time's a charm. All right, if you didn't play today, sorry, I just ruined the game for you. For the day. But that was fun. Shelly, am I low energy? Is that it? Could be. Shelly says I'm low energy. Sorry, I didn't realize I was so low energy. I always get told that I have a lot of energy when I don't feel like I do. So all right, I'll try to bring it up a little bit. Boom, energy, it's here. Thank you for that. Appreciate that. Yeah, let's get some energy going. Let's get some charts going. Drink a Red Bull. Okay. You done? Okay. No more. Okay, Andy Y is asking a relevant question here, and then after this, we're going to go over to our guest. I did not see the Boeing headline, Andy. The beauty of Benzinga Pro is I don't have to see every headline because the headline's always there. Let's go to Benzinga Pro right now. Hop on over into a news feed. See what we got. Boeing. What's the good word? They got an order from Qatar Airways. They expect negative operating cash flow in future quarters until deliveries begin to return to historical levels. May need to obtain additional financing in order to fund our operations. Okay. So who was it that asked whether there was a good or bad headline? Who was that? Andy Y. It's not great. Okay. It's not great. If you're coming out and saying in an SEC filing that, yeah, we may need to raise money, let's go to a Boeing chart. I don't know when that filing hit. The good news is we can actually check to see when that filing hit. Oh, from 10:30? The 10K? At 10:30? That's a weird time. Right there. Let's go to a 1-minute chart. Right there. That drop. So yeah, it's not great, generally speaking, is a rule of thumb. It's not great if your company is saying, yeah, we're going to need to raise some money, whether it's via debt or via equity. Not the kind of headline you want to see. Now, that being said, Boeing is on my watch list. I don't own it. It's been a tough stock to own, frankly, if you have owned it. It's on my watch list for the very simple reason that they've got a duopoly on their business, and should they ever get to a point where orders are rebounding back to pre-COVID levels, then, or at least getting in the ballpark of pre-COVID levels, then there's no reason we couldn't go back to 400. But again, I don't own the stock. It's been a brutal performer. Again, but it's not very few companies can say they have a duopoly, and Boeing is one of them. So that's why it's on my watch list. Yeah. So all right, let's do this. Okay, I'm all caught up on the chat. My next guest is here. He's lurking backstage, and Peter, if you're good to go, you want to give me the thumbs up? I think he's ready. Yeah. All right. Let's bring him on a couple minutes early. We got Peter Wall joining us. He is the CEO of Argo Blockchain. They announced a couple weeks ago that they are diversifying. We're going to talk about this new venture of Argo's. So that being said, let's give Peter the special intro. He gets the special intro on Benzinga Live. Peter Wall, Argo Blockchain, welcome to the show.
Spencer, how you doing? Nice to be here. And look at that, I even get on early. It's supposed to be 12:45, well, and I snuck in.
I called an audible. I just said we're going to do it.
I like it.
We're going to do it.
I like
so,
it.
all right. Well, let's talk about the Argo
we're talk about
Labs.
The Chiefs Bengals game. Are we not?
Oh wait,
I thought I was coming on to talk about the Chiefs Bengals game. I think there's been a misunderstanding. No, I'm joking.
Wait. Are you from Kansas City or Cincinnati?
No, I'm not. But I'm a football fan.
Okay. I mean, hey, we got a regular guest on our show that's from Cincinnati, and I feel very happy for him.
Must be pretty excited. Yeah,
I feel very happy for him. I saw my friend text me this because we're in Detroit, right? And Stafford's in the Super Bowl, and Eminem is performing, so it's the closest that Detroit's ever come to a Super Bowl. But anyway,
what's the feeling in Detroit? I mean, are people upset? Maybe we're taking a tangent here, but
that's a great question.
Upset,
So there's about 15 people in the office right now. We had a big debate this morning between how do you feel? And I'm in the camp of you should feel happy.
Right.
But not everyone agrees with me. I thought that was a pretty innocuous take to have, but
it's like when Brady left. It's like when Brady left New England, or do you cheer for Tampa if you're a Patriots fan? Or do you not? Except Stafford never won anything in Detroit, I guess is the difference. So
yeah, I mean, full disclosure, I'm not a Detroit. I'm not born and bred Detroit or Michigan for that matter. I didn't grow up a Lions fan, but I've adopted them and I'm rooting for them. I mean, come on, you spent 12 years on the Lions. You got to feel good for the guy. But
exactly.
Anyway,
all right, we digress.
Yeah. We digress and then we regress. Let's go to Argo Labs. Tell us about that. This is the new non-mining business that you guys launched a couple weeks ago. What is the goal of Argo Labs?
The goal of Argo Labs is really to diversify and to make sure that we're a blockchain company. We've always said we're not just a miner. Obviously, mining is our core business. We've been doing it, for 4 years. We've been publicly traded for 3.5 of those. We know the mining world very well, and have lots of developments happening this year and onwards into the future around mining. So we're not abandoning mining in any way, shape, or form. But Argo Labs is really for us. It's about being able to participate in other parts of the ecosystem. So disruptive, innovative parts of the ecosystem, to being able to support decentralization on blockchain protocols, and basically to allow our shareholders and to increase kind of shareholder value through network participation. Sorry, I have a bit of a cold, and strategic diversification. So too much interesting happening in the space not to jump into it.
So like what can you be a little more specific as far as what kinds of technologies you're trying to back or get involved with, or
yeah, sure. So I can give you kind of a couple couple examples. So if you go back to 2019, before we called Argo Labs, we've always been believers in the space in general. We've always believed that, you know, crypto is more than just Bitcoin. We love Bitcoin, but there's lots of other things happening. So in 2019, we were early investors in Pluto. We bought a bunch of in Polkadot. We bought a bunch of Polkadot when it was trading at $1. Obviously, since then it's done very well. So now we're kind of taking that philosophy to other parts of the space. So we are staking UST, for instance, on Anchor Protocol. We have bought some NFTs. We are and NFTs that we're able to stake and that we're able to generate revenue through. We are investing in early stage projects in composable finance, Picasso, crowd loan projects like Affinity. We are running Ethereum nodes. We are running Solana validator nodes. So kind of a wide diversification of opportunities in, broadly speaking, the Web 3.0 space, and kind of leaning into those with a dedicated team that is full-time working on this side of the business.
Okay. And just to be clear though, it's not as if you're not mining Bitcoin anymore. I mean,
no. So the idea is we go out, we raise capital, which we've done in 2021. We raise, either debt or equity. We buy machines or build infrastructure. We mine Bitcoin, and then we take a portion of that Bitcoin. Right now, it's about 10%. Give it to the Argo Labs team, and they diversify those digital assets into these other projects with the goal to create uplift, the kind of uplift that we saw over 2 years with our Polkadot investment. So we're looking at that kind of time frame, 1, 2, 3 years. It's not a trading team. They're not doing swing trades or anything like that. It's kind of a medium term horizon.
Got it. Peter, what is your message to the Bitcoin community at large right now? The downtrend that Bitcoin's been in is obviously, it's not a new phenomenon. This is a feature, not a bug. I don't know why, but for whatever reason, maybe it's because the stocks are going down with it, but it seems like there's a little bit more anxiety about this particular downtrend going back to November as opposed to like the one from
really. I don't know if that's true, Spencer. I
mean, maybe we don't. Maybe
it always feels like that, right? Like it never feels good to go down.
Maybe. Yeah.
But look, we've been, as I said, we've been doing this for 4 years.
Yeah.
I've held Bitcoin for a long time, personally, and this is, this comes with the territory, right?
Yeah.
It's a volatile asset, and that volatility is evening out to some extent. But those of us that all had our Twitter profiles with the red eyes, we're all expecting it to hit 100K. We're hoping that it would hit 100K. It didn't. It's cooled off a little bit, and I think it just comes with the territory. And if you're not used to the volatility and you're not okay with it kind of coming down in short and even sometimes slightly medium term, then you're in the wrong game. I mean, we all believe in this thing long term, and the strategy is the same: is to build and to hodl.
Right. So going back to Argo specifically, I think you guys mined a little over 200 Bitcoin in
December.
In December. Yep, 240 Bitcoin in December. So you mined a little over 2,000 Bitcoin, for the entire year. Mm-hmm. But of course, the mining revenue is tied to the price of Bitcoin, so it's gonna move with the direction of that. I guess like going forward, I don't know if have you given guidance as far as what you expect to mine this year or no?
Yeah, we haven't given guidance. I mean, but you can get a sense of it from our, hash rate that we've announced, machines that we've ordered, and the capacity that we're building. So the big piece for us for 2022 is our facility in West Texas. So we've been putting regular updates out. We just put one up on Friday on our social media, primarily on Twitter. And we're building a 200 megawatt facility, which is going to open at the start of Q2. It's going to be the world's largest immersion facility that we know of when it's up and running. And it's going to be great. So it's in Dickens County in West Texas. It's tapping into a particular part of the grid where there's a lot of renewable power, where there is a lack of available local load. Lots of generation happening in that part of the world, but not a lot of users. So we're going to tap into that power, get low cost renewable power, primarily renewable power, and then just fill it out from there.
What kind of renewable power are we talking about?
So it's primarily wind that's generated in West Texas. There's more and more solar that's coming online. There's been a lot of development of wind power in West Texas over the last 10 years. and there's that power has to travel a long way to users. It has to, head all the way either to Dallas, Fort Worth area, or to Houston or San Antonio or Austin. There's lots of power loss on those lines. There's lots of congestion on those lines. So we actually had a call with the head of the ERCOT grid last week, Brad Jones. And, the ERCOT grid is the kind of famously or infamously
we all know about ERCOT after last year.
Right. Yeah. It's the grid for Texas. And, Mr. Jones is pretty excited about Bitcoin because it's providing this flexible load to the grid in Texas so that when there's cold weather events or warm weather events, or when there's periods of high demand, Bitcoin miners can turn their power off and give power back to the grid, turn the machines off, give power back to the grid, and provide flexible load. And we already do that, Spencer, in Quebec right now, where we're mining. We curtail in the winter. We have an agreement with the two utilities where we're drawing power from NAP right now. The difference in Quebec is obviously it's in the winter when it's -20 when you're giving power back to the grid, and there's no financial upside. You get a flat rate, and the flat rate's the same for the year. They say we can curtail you X amount of hours per year. The difference in Texas is because of the specific way in which the system is built, the market is built, is there's this energy market. So when you turn your power off and give it back to the grid, you can do it in a strategic way that there's a financial upside for you, and it also makes the grid more stable, particularly as more and more renewables come on. Because the thing about renewables is that they're great, but they're not consistent. It's not consistent generation. So when the sun goes down at night, and Brad Jones was talking about this on the call, he said, we've got 20,000 megawatts, 20 gigawatts of solar that's coming online in the next 2 years. But at 6 o'clock, it gets dark. We lose that power. We need to be able to, and what was the term he used? We need to be able to have ramping, to be able to ramp down. So that's exactly where Bitcoin mining can come in. For 2 hours, we shut down, give that power back to the load. It can be very granular. I mean, we in Quebec, we shut down within a matter of minutes. And in Texas, it can even be more granular. And just the way in which the system works, the way in which Bitcoin mining works is you can do that. You can actually have that kind of flexibility. And there's very few other large, power users, industrial scale power users that have that kind of flexibility. If you're a steel plant or whatever, and you're generating, you can't say, oh, we're going to shut down right now. You have to plan ahead. Whereas Bitcoin miners literally can shut down for a matter of minutes or a matter of hours, and it works out well.
There are a few questions in the chat that I do want to get to. Rich Kaiser, is Argo looking to come to New York?
Like come to New York and set up facilities in New York?
I'm imagining that's what he's asking. Yeah.
We're pretty happy in our jurisdictions right now. So we're happy in Texas. We've got a big runway. So we're building this 200 megawatt facility. We then are building another 600 megawatts, we have the 200 megawatt facility we're building. We have another 600 megawatts, which we've been granted through an interconnection agreement out of the substation, which is adjacent to our property. So that's a pretty big runway of power. And then we've got our 2 facilities in Quebec. So we're pretty stoked with what we got.
This is a bit of a different question. So Argo, your stock is part of the BITQ ETF. Has that inclusion, has that had any effect on like the business or the stock at all?
No, I mean, there's lots of ETFs that are being spun up. It seems like kind of every month right now. Obviously, the one ETF that is currently our largest shareholder that is probably the most well known is the Block ETF, which is kind of all blockchain assets, and they own 4 or 5% of our company. The other ETFs more seem to be kind of just smaller pieces that come.
Okay, got it. And so, in terms of back to the alternative energy, I mean, there's the wind, right? You're in Texas, so that's obviously, why you're doing that. But like whether it's Texas or whether it's some future jurisdiction that you're not looking at right now, but like, would you consider everything's on the table, right? As far as alternative energy?
Yeah, I mean, I think it's interesting the relationship between cryptocurrency mining and energy. I think we're seeing a couple trends. Obviously, the big one in 2021 was first half of the year, lots of talk about ESG. Fortunately, as a company, we were already mining with hydro in Quebec. Elon came out and said what he said about Bitcoin. Yeah, everyone was talking about ESG. We had already had a climate strategy underway. We launched that, et cetera. So that was, a big movement. And then a lot of miners that had been thinking about using carbon powered sources started moving away from those. And so now you've got like the Bitcoin Mining Council putting out numbers that, most of their members, over 60% of their members are using sustainable energy. The estimation is worldwide, over 50% of miners are now using sustainable power. So it's definitely moving in the right direction. We're trying to accelerate that by, doing things like being climate positive or carbon negative. Joining, Crypto Climate Accord. We're launching a mining pool that is focused on only using clean energy sources. So there's lots of positive kind of momentum in the space for moving, towards using renewable power and clean energy sources. But it's just going to take time. I mean, this infrastructure that gets set up, it takes time to build, and it takes time to set up in new jurisdictions.
Aside from the expansion into Texas, like what is the next clear catalyst for Argo specifically, or maybe it's just miners at large?
Yeah, so I can speak about miners at large. I mean, Argo as a company, we've got a few tricks up our sleeve for 2022, but we can't. Obviously we're publicly traded, can't, and we haven't announced them yet. In terms of miners at large, I think that we'll see what happens this year. Obviously, it depends on the market. I think there's been talk about, consolidation, about, companies starting to, there's lots of publicly traded miners right now. What does that mean? We were one of the first back in 2018. And now it seems like every month or two, there's a new one that's popping up, on NASDAQ or another exchange. So we'll see what that means kind of for the publicly traded market space. I think North America continues to be the premier destination for miners. Obviously, we saw the recent troubles in Kazakhstan, the crypto mining ban last year in China means there's no mining happening there. So I think just more scale in North America and more renewables.
Awesome. All right, Peter Wall, CEO of Argo Blockchain and big NFL fan. Peter, always a pleasure to chat. Have a great rest of your week. Thanks for coming on Benzinga Live.
Thanks, Spencer. All right, take care.
All right. While we were talking with Peter, I saw it as well. Chat, Sony is halted, news pending. Time to speculate. What could the news be? Recall that I wanted to buy Sony a few weeks ago and I never did. Ouch. I think probably Sony's buying someone. Sony's not being acquired. What's Sony worth? 130. No one's buying Sony. I mean, maybe they are. I shouldn't rule anything out here, but Sony's a big company. Market cap of $131 billion. I think it's more likely that they're buying someone. they're probably buying some publishers, right? I'm thinking about it. Microsoft went and bought the largest publisher, right? Activision. How's EA doing right now? EA spiked. Oh, and they gave it all back. But EA did spike on that headline. Gosh, what else do we have? Zynga's in play. Did Take-Two spike? Whoa, look at Take-Two. Whoa, we got up to 169 just there. Almost 170. And now we're back down to 162. So we got some movement here. I guess we should check Activision, right? And we have Jake Wujastyk on. We'll bring Jake on in a second. So the publishers are all spiking here. Is that the speculation that Sony is going to just buy someone? Maybe come out with a rival bid for Activision? Microsoft's too big to trade off this, right? Yeah. So anyway, Sony, and I saw the halt in Benzinga Pro. We have a tool that tracks. Sony's headline is out. My news desk guy just yelled at me. They're acquiring Bungie. Wow. All right, going after the developers. Thank you, Randy. He just shouted to me. So Sony's buying Bungie. I mean, hey, you had to think that they're not stupid. Bungie's not publicly traded. Hold on, why is my chart being weird? There we go. Bungie's not public, but Sony's not dumb, right? They saw the wave of buying. Take-Two bought Zynga. Microsoft bought Activision. They need to get some titles under their belt. So Tony's buying Bungie. All right. Big deal. Gaming space is hot right now. Is there any space hotter than video games? In terms of just deal making. It's on fire. Wow. So I don't think we have a resumption time on Sony. Yeah, Tomo, that would have been funny. But oh man, Tomo, if that happened, oh boy. Yeah, we don't have a resumption time on the Sony halt yet. When I see it, I'll let you know. I can't imagine it stays halted for too much longer. Are there any other smaller publishers out there, Randy? Like what's PL? Is PLTK? Is that one? Playtika? Not really moving off that. That's a smaller one. I don't know. Well, let's get Jake's thoughts on this. Jake Wujastyk is the co-founder of TrendSpider. He's got all the best charts and indicators, and joins us every single Monday. So, Jake, what's up, man? How was your weekend?
Hey, what's up? Everything was good, but it's nice to see some green markets. Weekend great. Hope you had a good one too.
Yeah, pretty okay weekend. I mean, I had to take my phone to the Apple Store. You know what's interesting, Jake? I had to get my screen fixed because I had it wasn't a crack, but there was a vertical line on my screen that was not reading my finger at all. And so I was without my phone for 2.5 hours, and there's a big difference between being without your phone by choice or not by choice. You know what I mean? I got home and I couldn't even check my email because I have 2-factor authentication on and I didn't have my phone. So I couldn't even check my email. I felt naked.
I've definitely had the experiences where it's you're grabbing for your pocket and you don't have your phone, but you're still doing it out of just kind of just out of routine. So yeah, I'm pretty attached to my phone, especially looking at the market. So I feel yeah.
All right, so let's bring up your charts here, and we'll just start the overall market here, but then we'll get to some individual names. If you have any tickers for Jake, drop them in the chat. But this is the SPY here. So we are coming off of coming out of the worst month for the SPY since March 2020. Give us your take on where the SPY is at right now.
Yeah, so the S&P 500 pretty much did nothing last week until
actually, Jake, I want to interrupt you. Can you try leaving and come back, because there's like a weird echo here. I think it is just a glitch in the matrix. Try just leave and come back, and then I also hear that too. I thought it might get better, but it has not gotten better. So hopefully he can just. But yeah, okay. So great point about Bungie. Microsoft used to own them. Bungie made Halo. Did you guys see the Halo trailer over the weekend for the show? I'm admittedly not a big Halo fan, but it looked pretty cool. So, what does this mean for Halo? I don't know. You know what it probably is? It's probably just insurance, right? This is just Sony getting some insurance on their end in case Microsoft decides to like be a bunch of dicks and take all the Activision titles off of Sony. Sony's got some, leverage on their end by owning Bungie. So, hopefully. We'll see. Hey, look at that. New camera angle. What's up, everyone? Now I'm over here. All right, we got Jake back. All right. Hopefully that works better, Jake. It sounds better already.
Yeah, I think something's wrong with my mic. I had trouble earlier and I completely forgot. I thought it was Google, but I guess it's my mic. So can you hear me okay now?
I do. And thank you, everyone in the chat, for correcting me that Bungie does not make Halo anymore. Thanks for that. I'm not up on the daily comings and goings of gaming as much as I used to. But anyway, let's go to the SPY chart again, Jake, and give us your take.
Yep. So, really last week you just had a lot of kind of back and forth action for literally the whole week. And then Friday you had a pretty big short squeeze into another strong day today. So I wouldn't say we're fully out of the woods yet, but I wouldn't be getting too confident, on the short side either. So the main thing that I'm watching is really 450. So 450 is just a psychological level. It's also a previous previous support, which would be potential resistance above. Right around 450 on the dot is kind of what I'm thinking. It's also the all-time high volume weighted average price right at 450 as well. So that would be the first area I'm watching. Sentiment has been a big thing over the last week or so for me, just looking and seeing, how really bearish people were, especially even on Friday and today, people still saying, the market's going to keep going down. The market has gone down. This has been like a huge move to the downside in such a short amount of time. I mean, the S&P 500 entered correction territory last week. So this is generally where you get some pretty big moves to the upside. However, a lot of people have been stumped and kind of tricked over the last couple of weeks. So I think a lot of people are kind of weary on actually going long here. And I think that's just probably going to fuel things. Now, this is where you definitely want to go into multiple time frames. So right now we broke out of the symmetrical triangle here, potentially going to get up to 450, and then we'll kind of reconsider things from there. But if you look at the weekly chart, this is a pretty solid candle last week that formed. And then you can see here, if we really continued higher, we could even retest this previous support that broke down in early January, and that would be up in the 470s. So, definitely have to take this market day by day. But if you're looking at the longer term side of things, at least on the weekly, you do have some reasons why you may be continued bullish into February. This reminds me so much of 2015 into 2016.
I said that earlier. Well, actually, I didn't say that. I said that RBC said, or Raymond James said that, but someone else said that, and I was relaying what they said. But doesn't it though?
Yeah, and it's it's almost the exact same time where things started to turn around. So in 2015, you had the oil companies getting destroyed instead of growth. Growth was kind of your oil companies this time around, and we saw oil companies getting just absolutely destroyed in August or earlier of 2015. And then the markets finally started to roll over as well going into 2016. And we finally bottomed out in early February, late January of 2016. And same thing, even the macro side of things, the Fed talking about raising rates like 4 times in 2016. Same thing here. So I think the market has priced in a lot of negative news, I guess, if you want to call it that, for equities. And so if the economy does remain strong, I think you've got most of this already priced in. And I get a lot of research reports from friends, my family that are in the markets on the professional side of things. And, I don't see any of these institutions really being bearish here. And so maybe that's a bad thing if everybody's on the same side, but I just think that this is probably a little overdone and you're probably going to get a big move. Now, if you do go to the monthly, today's a pretty important day. All the monthly charts are closing today. This is what is a little concerning. I mean, or, you can call it concerning, or you can call it a big washout before the reset in the market. So the month of January took out literally 6 monthly candles. So it took out 6 months of price action in one candle. So definitely not what I would call a strong monthly candle here. So if you're using kind of time frame continuity where you want to see a bunch of different time frames aligned, the monthly is definitely not aligned with your daily or weekly right now. That's for sure. So this is the only thing that I'm a little concerned about, this huge monthly candle. But you can also see when we've had some really ugly monthly candles in the past, we just consolidated and just continued to go up.
That's it.
So we'll just have to see. I just see a lot of.
They've been pauses. They've been pauses.
Yeah, I just see a lot of people extremely bearish, which that's awesome. Everyone takes their own positions, but when people are that, I had people last week on Friday telling me, no, the market's gonna gap down and crash on Monday. It's like,
yeah, I don't
get that. I mean, maybe, but to be that convinced, it tells me that you're very emotional about your position. I think a lot of people got emotional because they made a lot of money on the put side, and then they're just like, well, this has been working for 2 weeks. I'm just going to keep shorting the rips, and eventually it's not going to work in their favor. So I'm pretty neutral right now. I do have a position in Disney. I have a position in airlines. I think airlines look really good right now, mainly because they actually held a higher low in January than they did in December, which is pretty rare in this market for January. So, for me, I'm definitely keeping an eye on like Delta. If you look at Jets definitely looks decent. TrendSpider just got unusual options activity, something that I really haven't used a ton. But I did find it interesting. You had a pretty big order come in on the April monthlies for $47 strike. So, someone put in about, I think, over 300,000 in that particular strike. And generally, like if you're looking at the indices, I don't even consider thinking about, these being a directional thing unless they're over $1 million. But for Delta, a $300,000 order on the options chain is a pretty big order. But like on SPY, I wouldn't even think of that being relevant at all. It would have to be like a 5 million. And maybe not even that. Like that's the problem, I think, a little bit with options is you really don't know what's going on the other side. Is that a hedge? Is it not? But I did find it interesting. You did have, I think it was like 200% of the open interest came in on that strike. So something to consider. I mean, if you look at Delta, it looks pretty good on the monthly. You've got kind of this flag forming here. You've got a lot of things kind of aligning. You've got the Omicron definitely starting to pull back, I think. So I think you are going to see airlines do pretty well into the coming month. And they can move very quickly. That's the thing. They're not massive market caps. So when they move, you can get a 10% plus move in a day in some of these names. So I decided to take Delta just because I've traded Delta more than the other airlines. I'm more familiar with how it moves. So I took this one, but we'll see how it plays out.
And do we have a time horizon on this trade or
I mean, so I got into the March 18th $42 calls because they had pretty good open interest, and the 42 is almost right at the monthly high for this month. And so that's what I really like about this chart. You actually had a really strong candle in December, and you had a higher low in January. So I generally want to see a monthly candle looking good. I was going to take a trade in MU today, early on, but that monthly candle is absolutely brutal. And if I'm swing trading or position trading, I don't want to be entering into a possibly week trade with this type of monthly candle setup. So I personally like to see some things aligned before I get too much conviction.
Can you explain the significance of the monthly candles? And obviously they represent a month of price action, but every month like for example, today at 3:45, half my Twitter feed is going to be people like you that are be like, oh, I can't wait for my monthly candles, and just like, can you just explain why they're so important?
Well, I think it depends on your time frame. If you're trading the 30-minute or the 5-minute chart, the monthly candle means nothing. But if you are looking at maybe a 1 to 2 week horizon, that would be half going into February, where if you don't have a really strong monthly candle, all of these patterns are fractal. Like, this is not, I look at the market as kind of like a blackjack table with different setups having different odds. This is not a setup that I would be comfortable taking if I wanted to do a swing position here. So I generally want to see at least like a higher low. I mean, the airlines actually had some decent relative strength this month. And I think the market, and the nice thing about the airlines too, at least Delta, they've already had earnings. So the earnings has already kind of had its move, and you don't have news coming in and messing that up. So I just think that I was watching the news the other day. They said hospitalizations were going down in Denver at least. And so it seems like we're kind of over that peak. And I just think if the media catches on to that at all and starts mentioning, maybe travel's coming back with us peaking, I think that's probably going to help airlines. But, MU was also one I just loved. I mean, if you look at the daily chart, you've got this nice support area. You're bouncing right off of it after kind of flushing below it and closing above it on Friday. But if I'm going to swing trade something for a week, but the thing is, right, if Delta went up 10% tomorrow, I'm out. Like, especially in options, you want to sell those impulse moves because the implied volatility just spikes. So that's kind of what I'm thinking. And I think, let's see, when are earnings for? So yeah, earnings aren't for a while in MU either. So you don't have that variable in the equation either. But I just felt like airlines have kind of been on the back burner, and people probably are watching them again. Here's Jets. That's the ETF for this.
They never made it back. They never made it back.
Yeah, they still haven't made it back. I mean, you've just got this really kind of tight consolidation going on right here, and this thing keeps hitting daily highs. And like I said, when airlines really move, they move, and I just think we're kind of getting close to that point for airlines. And if you look here, we were way up here on Jets around 23 in mid-January, and now we're at 21. So you still have a lot of room just to retest these highs from 2 weeks ago. And so that's why I've got an eye on it. And two, the options are pretty liquid. Some of these chains you go on, especially like earlier this month, they were dead. You had no liquidity on the options chain, which was a little bit of a sign that there may just not be a lot of liquidity in the market. And that's probably a reason why we got hit so hard as well. You probably had some forced selling from margin calls and that type of thing. And if you don't have that liquidity to absorb that selling pressure, you're going to get hit that much harder. And I think that's part of what happened over the last few weeks. But yeah, airlines, Disney, I think reopening plays are going to come in. Disney's another one I got in on Friday. And simply just due to the fact that we've got this huge gap above. And I just think Disney, and they have earnings coming up in next week. So I wouldn't hold through earnings, but I would, play that anticipation into earnings and that higher implied volatility that happens when you do get into earnings. So it's kind of your crisscross here. Your previous support would act as potential resistance above around 147.50. And so that would be, and that's right in line with this gap above. So we'll see if it fills. Generally, prices can move pretty quickly through these gap areas because you just don't have a lot of liquidity up here. And so we'll see if we get a continuation tomorrow, and we'll go from there. But this was a pretty good trade from Friday, and I'm still holding on. I think it's got more room to go.
More room to go to the upside. I'm long and strong in Disney, but I'm very I'm not as panicky about the overall market, but I am a little bit panicky about Disney right now because it went up for streaming, and now that streaming growth is slowing. So anyway, let's do some tickers from the chat. If you have anything on your mind you want Jake to take a look at, drop it in the chat. Let's look at Royal Dutch Shell, RDS.B or /B or .A/B, whatever. The two share classes, same company.
Yeah, and this is another actually part of the thesis on airlines, right? Like if oil does take a step back, I think that's also going to help airlines too. You lower the cost of operations with lower prices. So yeah, this one's kind of got a pretty good setup here. Let's go to the daily. The weekly hasn't really done much. So yeah, on the weekly, you've got the thing that I never like to see is these gaps below. Doesn't mean that they'll fill, but you just have some gappy price action here. So there was a lot of rotation into oil names during January. And I'm just thinking if money starts to rotate back into tech and some of these names that have been beaten down, that money's likely going to come out of the leaders that have been leading for the last month. So all in all, I mean, if you look at the monthly chart, everything looks good, but it's already had such a big move. And so that's what's a little worrisome to me. If you pull up just a basic kind of diagonal resistance line here, you're right at this resistance area as well. And this is on a lot of the oil names. ExxonMobil looks very similar. They all move in tandem. So you are nearing this kind of resistance zone that has been resistance in the past. And so going right up into resistance, I personally wouldn't really want to, get into a long position at that point, especially after we've already moved from 44 all the way up to 51 in 1 month. So a lot of people like to buy strength and like to buy the leaders, but a lot of the time the leaders do stop leading. You saw this in the semiconductors. Everybody was AMD, NVIDIA, for life. And then all of a sudden they absolutely got wrecked, like over 30%. So there's rotation in the markets and leaders don't lead forever. And so you just don't want to find yourself buying too many dips and then getting destroyed like a Roku or something.
Yeah, real sorry to interrupt you, but Sony just came out of that halt. It wouldn't shock me for a second to see Sony get below. It opened way above where it was prior to the halt, but it wouldn't shock me for a second to see it below 111 or 110 here. Typically, they hit stocks when they do acquiring. So Sony out of the halt now after about 20 minutes of being halted or a half hour being halted.
I mean, if you look at the 65-minute chart on Dutch or Royal Dutch Shell, it actually looks pretty good. So you've got a lot of volume supporting price here, especially considering we've been trading in this range for the last few trading days. So, on the shorter term time frame, it actually looks pretty good. We'll see if oil continues up. If you've got a big push that the world is opening back up after this Omicron and blah, blah, blah. Denver's considering removing their mask mandate this week. So you've got a lot of things maybe playing into oil continuing up, demand for oil, continuing to go higher. And yeah, I mean, the short term, the 65-minute chart does look pretty good here, I have to say.
Okay. There we go. World Dutch Shell. Let's go back to the chat. And someone asked about the Russell. Sorry, who was that? That was who asked about the Russell? I don't remember who, but somebody asked about the Russell. Yeah,
I mean this looks pretty strong right now.
Oh, there we go.
You've got very similar to what we talked about on the SPY. You've got this previous support zone that is going to act as potential resistance right around, let's say, 206, 207. And same thing, you've just got a lot of people that are like convinced all these gaps below are just going to fill like immediately. And you have to, if this is truly a bearish move, you have to have these massive moves to the upside to suck in all of that liquidity so these short sellers can get back in their short positions. If everybody is shorting, then you don't have a ton of liquidity. But if everybody is buying, then you have these people that you can sell into on the short side. So, if this is truly like just a little bounce before the next leg down, I would anticipate at least a pretty strong move up to around 206, 207, possibly even kind of a V bottom action here. We'll see if this does start to break down through Friday's low around 188. You do have a gap below around 178. But this, we'll just have to see. This last 6 or 7 trading day price action is very range bound from 203 all the way to 188, which is a huge range. So I'm thinking if we do break through that high of around 203 or this low, you're going to get a pretty strong move. And it's just if then, if we break down below last week's low, then we're probably going to move pretty quick down to the gap below. But if we break this high, I'm thinking at least 206, 207, you may even get to 210, which is your psychological level.
Okay. We'll do a couple more here and then we'll let Jake hop. I don't know some of these. Okay, we can look at Microsoft or KT. I know that one.
This actually had some relative weakness today. And maybe got a little bit of ahead of itself. But yeah, the daily, daily looks okay. If you just draw a basic resistance kind of zone here, we did have a breakout over the last couple of days. So you had multiple times where we tested this zone and finally broke out on Friday. And now, who knows, maybe just a little retest of this resistance and a continuation up. But definitely interesting to see this one not doing as great with the market strength. So the weekly chart from last week is very strong, huge bullish engulfing candle. So I would be shocked if this isn't at least a short-term bottom, but at the same time, you just have to kind of take this market for what it is and see if we do get some buyers going into February. So with this being the last day of the week, or excuse me, the month, pull up the monthly candle, doesn't look incredibly strong. But, you've had a few of those candles that didn't look incredibly strong, and we just kept moving up. The question is, how long does this just straight linear move up continue? And I think that's something to consider for sure. So maybe we get a couple week bear market rally, especially in some of these growth names that have just been destroyed, and we have to go from there.
All right, last one here. Let's look at Celsius, CELH. The Luke Jacoby favorite, the beverage company.
Yes, sir.
Cut in half in the last few months.
Yeah, so the gap, sorry, not the gap, this previous, and the crazy thing is the market really just respected horizontal levels over the last couple of weeks, and it always does, but especially the last couple of weeks, these horizontal levels have really been your key areas for potential support and resistance areas. So we did bounce right at this previous area from March 2021, and so far so good, but still not incredibly convinced on this one quite yet. You would really, like a healthy move would be something like this, where you get a move up, kind of chop around, and then continue up. That would be kind of your ideal move. You don't want to necessarily see this go straight up, because then it can go pretty quickly back down, straight down. So all in all, daily looks okay. Weekly, it's Monday, so we can't really look too much at the weekly, but last week's weekly candle looks pretty solid for at least a potential short-term bottom. And then let's see, where is the COVID low? So the COVID low would be an area of resistance. The COVID low VWAP would be an area of resistance above, which is right around 49. Let's just call it $50, which is the psychological level as well. So for now, the chart still seems broken because you are below this COVID low VWAP. If it can get above that, that's where I think things could get a little more exciting, and maybe a retest of this previous support zone before we continue down, which is kind of essentially a bear flag from December. And that would be around 60 to 63.
All right, Jake Wujastyk is the co-founder of TrendSpider. I would encourage everyone to check out the platform. There's a link in the description of this video to the website. You can also get a discount code of 25% off using the code on the screen, BZ25. Jake, it is always a pleasure. We'll talk to you again next month.
Sounds good. Have a good one.
All righty. Let's move on to our last guest of the day. We're gonna go from a pure technical chart to options. Let's bring on Chris Capre. He runs the Benzinga Options Trading School, which I'm going to throw a link up in a second. And yeah, let's just bring him on. Chris, what's up, man?
What's happening? How we doing?
Good. I'm riding solo today. I got no Aaron with me, so it's just me and you.
I noticed your Tonto is missing.
I know. Well, I was gonna do that, like show like the empty seat, and I just figured it was too sad. So
You need like an anime or something like that. Like,
well, we
sitting
have
next to you.
cardboard cutouts of like Seinfeld characters. I just forgot to bring them up.
That's not bad. That's not bad. If we
Yeah.
can get like an anime in there, that would be pretty cool as well.
Yeah. All right. How was your weekend, man? How was the day treating you so far?
It's good. Good. Yeah. You ready to talk some options?
I'm ready. What do we got on your radar?
Okay. Let me share screen.
Yeah.
Show you
By the
what's
way,
going
as I
on.
said, I will put a link up. Let me do it right now. I'm going to put a link to the Benzinga Options Trading School. It is in the description, but for
Yes.
those of you that are, extra lazy and just want to click directly from the chat,
There
here
you
you
go.
go.
Okay.
Where is
You
it?
should see my screen. I think you just need to add
got
to
you.
stream and we're good. Sweet. Okay. So when you talk options, especially when you talk short-term options, you have to be looking at VIX and SPYs. So we're going to look at VIX and SPYs and we'll take a look at Apple. So VIX, when SPY was falling, and I can put a nice compare in here to that so we can see SPYs side by side. So you can see when VIX was spiking, SPYs was falling. SPYs was crashing, especially when VIX really started to rip up. SPYs was crashing. Now, VIX generally above 30 statistically over the last 10 years generally portends that the forward returns, the forward 20-day 30-day returns on SPYs is positive. Why does generally a high VIX 30 or plus generally portend that over the next 20 days SPYs will have a decent positive return? Well, when VIX goes up, this is not only a measure of fear, but it's also a measure of implied volatility in options. Means that when we have high VIX, we have high implied volatility, but it also means that traders are buying put protection. So they're buying long puts. Now, as VIX continues to rise, so does the cost of the options and implied volatility. And eventually it's going to get too rich to a point where unless you have new catalysts coming in saying, hey, there's like a situation in Ukraine, or we're going to raise rates earlier, or we're going to raise rates more times this year, without any new catalyst to keep pushing VIX higher and higher, VIX is going to come down. And when that happens, implied volatility on those options is going to come down. And those puts that are people are long puts, those puts are going to start losing value. So short dated puts, which a lot of this protection happened when VIX was climbing and SPYs was falling, traders are buying puts. So we put a plus P for buying puts. And as it goes lower, they buy puts. And as it goes lower, they buy puts. But if VIX starts to stall out, these puts are going to start to decay fast. They're going to decay in terms of time, and they're going to decay in terms of volatility.
Wait, and real fast, while the VIX is rising and people are rushing to the store to buy their puts, the prices of those puts are rising.
Yes, as implied volatility goes up, the same at the money options are going to become more and more expensive. So the price doesn't even have to go anywhere. If implied volatility goes up, the cost of those options go up because the pricing of options, one of the major variables is implied volatility, or the capacity for a stock or ETF or whatever to move up or down. Right. The more volatile something is, the more possibilities that it can manifest in terms of prices. And so that means that the options have to be more expensive because people who sell those options need a higher premium to account for the increased risk in terms of volatility. So as SPYs, is going down, you're going to see people buy puts. But as these puts keep getting more and more bought, the cost of them goes up. And eventually they just get really rich. And so without these new catalysts to send VIX higher, eventually what happens is that people start saying, like, if they bought puts here and all of a sudden SPYs is coming back and VIX is coming down, they're going, it's not worth it to keep these because they're losing money every single day and they're losing money on volatility. So they start exiting these puts. And that actually creates a tailwind for the market. It creates a tailwind for two major reasons. One, if traders are long puts, dealers are short puts. If dealers are short puts and the market goes down, the dealers have directional exposure to the downside. So to hedge that risk, they will short shares or short futures. So the dealers actually contribute to the downside move. Now, when those puts start to lose value, then the traders who are long puts start to release some of those puts, which means that the dealers start to release their short share hedges, which gives a lift in prices in stocks. As I told our members in the Benzinga Option School today, I said, look, VIX losing, let me get rid of the spies here. VIX losing this 2730 means that we should start seeing a huge unwind in those long puts. And that creates what is called a Vanna rally. It's implied volatility coming down as VIX comes down. The implied volatility comes down. Dealers' hedging requirements change. They start to unwind some of their short share hedges, and that creates a rally in the markets short term. So short term, because VIX is selling off, and you can see how aggressive this is by the fact that, here we are, here's the morning, like this is the session right here. And you can see it's just staying below the 9 the whole time. Only until the last 10 minutes have we gotten above the 9 EMA. This is a 5-minute chart. To stay below the 9 EMA, there has to be consistent selling in VIX, and implied volatility has to be coming down. This is dealers unwinding their short share hedges. So if VIX closes below, say, 2730 on a daily and closing basis, then that should create more of an unwind of these long puts, and SPY should continue to see a tailwind. How long? Short term. Like IV coming down, VIX coming down rallies only last so long because eventually VIX is going to come down to a normal level, 2220, where that unwind is no longer happening. So short term, I'm bullish on SPYs. Today, maybe tomorrow, maybe Wednesday. Just depends on how much VIX comes down. As long as VIX keeps coming down, you're going to see SPYs continue to go up on a short-term basis. I think SPYs has room to run to 451 this week. It's going to have a little bit of work to do to get past 451. But the bottom line is if it can, then that will really shift the architecture of the option flows and the dealer flows to where they will actually start being supportive of options, meaning that as the price goes down, they'll actually buy the dip. And so that will actually be supportive to buy dips on pullbacks. So we're not there yet. What we are seeing today is really just an unwind of the kind of VIX being really elevated. And you can see, you notice how share volume isn't that high? That's because this rally isn't due to people buying shares in SPYs or buying the ETF underlying. So real money buyers aren't buying this. If it was, we'd see volumes stable or go up. We'd see more and more bars going up. We're not seeing that. So the institutions are not buying this rally. This rally is an unwind of VIX. That's the difference. So for right now, I like buying SPYs on pullbacks, 442, 441, 443 area to get long for the rest of the week, maybe till Wednesday. If we're lucky, we get maybe until Thursday. But IV coming down, VIX coming down, rallies only tend to last a couple days. So because of that, I'm going to look to trade the long side on SPYs on pullbacks, try and get up to about a 450, 451 print. And so that's what I'm looking at on VIX and SPYs.
That's an entire, I think the only thing you didn't say there that you could have was like, hey, this could be why the market is up today. I mean, you could bring it all down to that.
Yeah, easily.
Yeah.
Because again, if the share volume was strong, and we can see right now, share volume is less than half of the 10-day average, and we only got 2.5 hours left, which means that, we're not even going to come close to the 10-day average. When you hit the 10-day average or more, that means there was solid share volume buying interest on the day. This is way lower. I'll be surprised if we hit 100 million, or 105 or 110 million, which means we're way under the share average volume in terms of buying. People aren't buying SPYs in terms of the underlying. SPYs is getting a lift because the short share requirements from dealer hedges is unwinding. That's what's happening on the day. So that's at least my analysis from an option perspective. So I'm happy to keep trading that as long as VIX stays below 27. If VIX gets back above 27 on a new catalyst, tensions out of Ukraine, whatever it is, Omicron cases spiking, then I'll, short term shift my bias away from being bullish. But short term, I'm bullish right now. Medium term and long term, I am not there yet. We are not out of the woods yet. I want to see a weekly close above 451, because if we do that, then we are in a architecture where the gamma in the underlying market is positive. And so that creates a situation where the market is much more supported. If it pulls back, dealers start coming in and buying dips. We're not there yet. So the only thing that I can say that I'm really bullish on long term is Apple. I feel like Apple is now out of the woods. It had its earnings day after the market. Next day, really lots of share buying. Today, a little bit less, but it's still holding its gains. So I think Apple kind of runs out of a little bit of this fuel maybe today or tomorrow, gets a little bit of a pullback, and I'll buy Apple between, say, 160 and 170 and look to hold that pretty much for the rest of the year. Now, because I'm not long-term bullish on the markets yet, I don't feel like they've recovered enough for me to say long-term bullish, that the trend is, going to continue back up or anything like that. I will, in getting long shares on Apple, I will do a couple things to neutralize the risk. One, I'll sell calls further up. That's what minus C means, sell calls. So I'll sell calls further up, probably around 180, 185. I'll try and do this every single week to collect premium. But then I'm also going to buy at the money puts. And that's what plus P means. I'm buying a put. Just because between now and, say, February 18th, maybe through March, I do want some downside protection. So I'll get long shares. I'll sell calls further up. I'll use some of that premium to buy these puts. Then if Apple does, in the near term full back or whatever it is, fine. My puts will neutralize the downside risk on that, and I'll still walk away with a little premium from selling calls. If it goes up, I lose some of the profit from the shares going up because of the long puts, but I'll still make money on that, and selling the calls, I'll make some premium. So either way, I got a pretty well hedged position on Apple. So I'm just waiting for a little bit of a dip, and then I'll get long shares and then start selling options on that.
Now, you could have done this last week, but you specifically waited, right?
Yeah. I wanted VIX. I felt like VIX was showing a lot of promise, and you can kind of see in the 1 hour charts, you can see pretty clearly that VIX was
I also meant because of the earnings, right? You waited till after earnings.
And earnings, of course. I wouldn't trade, I wouldn't take a new position just before earnings. But even if, let's just say earnings never happened, I still would have waited for VIX to get below 2730. Because as long as VIX maintains this here, like if VIX was going sideways, you are not going to see implied volatility come down that much. But because we produce lower high and lower high, three highs that were same and then lower high here, VIX is going to keep stepping down. That just creates more and more of a tailwind for SPYs. But if VIX had just chopped around in here, or maybe some Fed official comes out and says, you know what? We said 3 rates a year. We're actually thinking about 4. Well, then you could see VIX spike. And so I wanted it to clear this because I felt like once it clears 2730, then at that point, anybody who's long VIX or long volatility, they're going to unwind their position. Anybody who's got long puts, they're going to say, okay, it's time to start unwinding it. Like the decline on implied volatility be too much to not create an adjustment in positioning. So I felt like this was kind of a catalyst for me to say like, okay, now it's time to start looking at that. Earnings or no earnings, it wouldn't have made a difference.
And so I mentioned off the top, Chris Capre runs the Benzinga Options Trading School. Someone in the chat asked, is this the kind of thing that's taught with a subscription? So Chris, tell people, like, is this the kind of thing that you're doing every day? And I'll bring it up on the screen right now.
Yes.
In the Benzinga Options Trading School.
Yes. So every single day, members of the Benzinga Options School get the following. So Monday through Thursday, we teach classes. We have a 2-hour class, different subjects each day. And we have 8 different lessons that we go through. And then we repeat the lessons so we can go deeper and deeper and deeper into them. So that's Monday through Thursday. And then on Fridays, we have open office hours. But after classes, Monday through Thursday, we also have an open office hour section where we talk about this live every single day. On top of it, I share my trade ideas. I shared 2 option trade ideas last week. Any new option trades I'll take this week, I share with them. So I share trade ideas that I'm looking at. We also analyze student trade ideas every single day. We got hundreds of students in the course who have trade ideas that they're thinking about doing. either they're thinking about doing or they're already in it and they want help with it. And we go over them in real time as well. We do live market analysis once a day. And Monday through Thursday, I also do a pre-market commentary every single day in my own chat section where I basically say, look, here's what's happening in the markets. Here's what he's saying. And this is what I was saying right here. There is no material buildup in calls above the market, but VIX is trending lower. And a VIX daily close below 27 likely leads to implied volatility VIX coming down, which will create a tailwind for equities. So I provide market color every single day. I give them analysis of what's going on in the order flows on the option side, whether that's bullish or bearish, whether volatility should be expansive or contracting, whether we should expect directional moves or not, what's going to be happening. I'm doing that Monday through Thursday every single day. And it's this type of information that I'm sharing with my students every single day for hours every day.
Yeah. So again, can't recommend it enough. It's a lot. Like if you're someone like me, frankly, I should also be in this school if I didn't have a full-time job,
a day job.
But if I didn't, I would 100% be here learning from Chris.
Yeah, we've definitely had a lot of the BZ team kind of coming in for classes and learning.
Yeah.
And
that's all. I didn't even know that.
Yeah. Yeah, we've had a few come in and they're not only loving it, but they feel like their option education and skills are just going up light years, every time they come to a class. So, it's super well built, and just we actually did the math. So, at the price that it's at, the $12.97 price. So keep in mind it's for an entire year. That's 52 weeks. Now, let's say I take 2 weeks off. Okay, got 50 weeks times 3 hours of classroom a day. This is not including Fridays, times 4 days a week. Sorry, I did that wrong. So 50 weeks times 3 hours a day equals, and then we times that by 4 days a week. They're getting 600 hours instruction for a price of $12.97. That translates to roughly $2.10 per live hour of instruction. Wow. There's nowhere on the planet you can pay for live instruction from a 2-decade veteran for $2.10 per hour. It works because we do it in scale. If it wasn't in scale, it wouldn't work. But because we do it in scale, it works. And so imagine what it would be like to have 3 hours a day, 4 days a week, live instruction on options, along with trade ideas, along with analysis on the trades you want to make. Imagine if you have a trade idea, you post it to me, and I'm like, hey, watch for this. Look at the open interest on this. Got to watch your position on this. I like this trade, but it'll stop at this level. Just imagine how many bad trades you would avoid and how many more good trades you would get from that. It pays for itself. So to me, it's a complete no-brainer. It's an absolute no-brainer for anybody who's thinking about learning options.
And again, the link to the school is scrolling on the bottom of the screen, but it's also in the description of this video. So check it out. And CG, we will package. I don't know when. We're not doing it right now, but we will get to a point where we're packaging the options trading school with Benzinga Pro. We're just not there at the moment. All right, let's do some ticker time. We got 10 minutes left in this show, and then I'm gonna hop off and see the stage to the moon or bust, guys. So if you have any tickers for Chris, what?
Let's do some open call outs. So if somebody has tickers they want to look at, just put it in the chat.
For sure.
Here, would love to do
I'll start
with Nick and Chris.
Yeah, I'll start, Chris, because Amazon reports on Thursday after the close. So let's take a look at that.
Let's take a look. And then let me pull up some options data on Amazon. Now let me pull up some live data just so I see what's going on in the market. Okay, so on the day, Amazon has done 114,000 options, 65,000 calls, 48,000 puts, which is it's not bad. It's actually decent in terms of overall volume. Prior to today, Amazon had about 433,000 calls and 400,000 puts. So roughly 840,000 options prior to today. And it's added 114,000 options, which is roughly 10%. It's like 14% of the total flows or total open interest. That's decent. In terms of expiry, The next biggest expiry is until February. So Amazon doesn't, there's not a lot of traders taking short dated options on Amazon right now. They are waiting till after these earnings. So you don't have to worry about short-term options right now and Amazon pushing it up or pushing it down or anything like that. Just looking at the option data between, where are we at, 3,000 now? I think there's going to be some resistance between 3,000 and 3045, which is, yeah, right around here, like right around 3040. So I think there's some resistance here. But as Amazon increases in price, the hedging requirements go down. In other words, dealers are shorting less and less the higher it goes up. Sometimes when a stock goes up, dealers actually short more. So that makes it hard for a stock to gain. And then sometimes when a stock goes up, dealers actually short less, which means it makes it easier for a stock to gain. The higher Amazon goes, the easier it gets. You had a question there, my man?
Yeah, well, why does that matter?
Because if you think about it, if we just talked about that when VIX comes down, dealers unwind their short share hedges. The same thing goes with the stock itself. So let's say the stock is trying to rally, but the dealer hedging requirements force them to actually sell shares as it rallies. Well, then traders are trying to buy, like real money buyers are trying to push the stock up, and the dealers are like, we got to sell it. You buy, we got to sell in decent amounts. So it creates kind of a headwind for those stocks to gain and makes it choppier. It makes it harder for it to go up in a straight line. There are going to be other situations where the dealers are actually buying with the market. So there are times where dealers trade with the market, and there are times that dealers trade against the market based on their hedging requirements. When they trade against it, it's harder for those stocks to gain. When they trade with it, it's easier for those stocks to go up. So like on a day like VIX, if you look at the 5-minute chart, and we looked at this thing here, this consistently selling below the 9 EMA does not happen if dealers are actually buying into that. But because dealers are trading with it, it keeps the momentum strong to the downside. Okay. Again, if they were buying into this, if they had to buy VIX or they had to buy shares in this case, or buy VIX, if they were to buy options in VIX as it goes down, this thing would not stay below the 9. It would push back into the 20, maybe even push back into a VWAP. It would push into a lot of other things. That means that it'd be a much choppier pullback. But because they're trading with the market, it's super consistent and high momentum.
Okay.
That won't happen if you're trading against the dealers, because they have hedging requirements with all their positions. So yeah, does that make sense?
Well, yes, mostly. to my.
Well, if you think about it like this, gamma squeezes. The reason why a gamma squeeze happens is because the dealers don't have upside protection in that stock. So, like when GME happened, dealers didn't have any upside protection on. Because
why would they think to do that?
Why would they think they need protection on GME? It's never done anything. It's been a super contained stock. And then what happens is traders start coming in and buying shares, and on top of it, they start buying calls in droves. If traders are long calls, the dealers are short calls. If the dealers are short calls and the stock goes up, they have risk to the upside. So how do they hedge that risk? They will start buying shares of GME to hedge that risk. The problem is that if that gets accelerative, then the dealers are trading with it. They're also participating in the upside move. They have to keep hedging as it keeps going up and up and up. So that's how you get a gamma squeeze. You're not going to get a gamma squeeze ever if dealers are trading against the market. So that's why it's important to understand what are the dealer hedging requirements around a stock, because you could be thinking, hey, this is going to gamma squeeze, I'm going to rip it. And it just doesn't get that because dealers are trading against you. You want to be trading with the dealers as much as possible.
All right, let's do a couple more tickers here. We got like 3 minutes left. Cool. Let's do PayPal for Christian, and then we'll do Splunk after that.
Okay.
PayPal's earnings. I think it's Wednesday for PayPal. I don't know.
Yeah, the last 2 weeks have been good for pretty busy on the earnings. Okay, so prior to today, PayPal had about 702,000 calls and 625,000 puts. The thing about with PayPal is that the majority of options on PayPal are not till February 18th. So option traders are not taking a whole lot of trades on PayPal for these earnings. So we don't have to worry about options kind of skewing the volatility one way or another. It's going to be mostly driven by share volume and then after earnings responses to that. But looking at PayPal, where are we at? 170. I feel like 180 and 200 are going to act as resistance unless we get a gangster earnings. Let's put unless we get a really gangster earnings out of that. I feel like 180 is going to create some stiff resistance. And then right here. And this kind of makes sense because if you look at this price section, there's going to be a lot of hedging requirements in here. There's going to be a lot of positions in here. So PayPal may clear the first hurdle, but the more it goes up into here, the harder this resistance will become.
Do you ever look at expected moves?
What kind of expected move we expect on PayPal?
Yeah. Do you factor that in?
Yeah, we'd have to see. We'd want to look at implied volatility. Like, when is it? Tomorrow? Yeah, we'd want to look at the implied volatility going in or tomorrow morning before earnings, and then we'd have an idea. Is it before or after market?
PayPal reports tomorrow after the close. So
after the market close. So what we'd want to do is we'd want to look at implied volatility at the open. What are the at the money calls with on the open? Then we'd want to look at the architecture of the options, and then we can make a forecasted move. How much would it move up and down? But yeah, we'd want to do that the day before.
All right. Splunk, last one here. SPLK.
SPLK.
And if you want more tickers from Chris, well, you know what? You're just going to have to sign up for the Benzinga Options Trading School. That's it.
All right. This is what I would call a mild option stock in terms of options. It's got about 118,000 calls and 61,000 puts. So about 100. It's almost 200,000 options. The options volume today, though, is low, 7,600, which means that option traders are not pushing this around. They're not getting bullish or bearish. I don't see a lot of options on this expiring until February 18th. So I would look for resistance on this. How far ahead? I think 131, 132, this starts to encounter resistance. Now, again, I don't know what earnings is going to play out or anything like that. We got a while. So, yeah, I think 131, 132 starts becoming stiff resistance. Like, the more it goes into that territory, the harder it's going to get breaking through to the upside.
Awesome. All right. Chris Capre joins us every single Monday for half hour or so to talk about trades he's making and take questions from the chat. If this is not enough, Chris, for you, well, I have good news. Again, every single week, but also every single day in the Benzinga Options Trading School. The link has been going at the bottom of the screen this entire time. It is also in the chat. In the description of this video. So check it out for real. Chris, have a great rest of your day and have a great rest of the week. We'll talk to you again on Monday.
You do the same. Be well.
All righty. I got to hop here because I got Moon or Bust going live right now, and they want my desk. They're here in office, and they want my space, which is fine. So I'm gonna hop off and let them have the desk. Everyone, hit that like button for me, please. Thanks to all of our guests today. Thanks to Chris Capre. Thanks to Jake Wujastyk. Thanks to Matt Hammond, and thanks to Peter Wall, the CEO of Argo Blockchain. Thanks to all of you in our chat. Aaron Bree will be back tomorrow, or so I'm told. So we'll have more fun on tomorrow's show. But hey, I enjoyed Ryan Solo. If you enjoyed that as well, then let me know. But I'm hopping off. Moon or Bust. Talking about Justin Bieber buying a Bored Ape. Yeah, I don't know. All right, Moon or Bust going live right now. The stream will end or redirect to that. Everyone have a great rest of your day. I'll catch you guys on At the Close in an hour and a half.